Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are going to be analyzing two articles, to where the first one is titled, SoFi Stock Slides After Downgrade to Underperform at KBW. And if you didn't know, the SoFi share price has dropped by 11.41% because investors are absolutely terrified of this recent stock downgrade by a prominent analyst. So we're going to be going over the latest and newest price targets for this company. What are the lowest end price targets for this company, and why are people so scared? I'm also going to calm your nerves in this video because I think a lot of people are overreacting right now. However, if you want more videos like this one, don't forget to go and annihilate that like button right now. Subscribe if you are new. Go ahead and become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube. And with that being said, I say let's jump right into today's stories. If you didn't know, SoFi Technologies is a fintech company that essentially operates as a digital bank. And SoFi Technologies recently gapped down in their overall share price by 11.61%. And this is right after an analyst downgraded the stock to an underperform rating from his original market perform rating. And he said that this was due in part to the premium valuation that the company is currently trading at regarding their share price. You should also know that SoFi has jumped extraordinarily high over the past few months, considering that they have surged 45%, outpacing even the Nasdaq Financial Technology Index, which is KFTX, which has only climbed 30% over that same period. Meaning that right now SoFi could be trading at a premium value, and that means that this analyst thinks that the share price is too high, which is why he downgraded it to underperform. And like we said, we're going to be going over the most bearish price targets in this video and what the fair value is for SoFi stock. The analyst went on to defend his recent downgrade of the share price by saying, and I quote, "SoFi's shares remain polarizing, but noise aside, anytime a growth stock is trading at premium valuations with 15 to 20% downside potential to consensus EBITDA, we believe a more cautious stance is appropriate," end quote. So essentially he's saying that the share price has surged way too rapidly and their fundamentals haven't caught up right now, especially in regards to their EBITDA compared to their current share price, or at least their overall market valuation. Therefore, sell-side analysts see further downside in this overall stock, even though this company is on the verge of achieving profitability, which is exactly what our next article is going to be discussing. So currently, just from the first article, we know that investors are overreacting. They essentially just saw an analyst downgrade the stock and then they are freaking out without remembering the fundamentals of this overall company. Because again, once we discount their overall valuation according to their growth rate, this company seems to be fairly valued, and I'll go over data which explains exactly that. The stock has had its ups and downs recently, but they have trudged forward nonetheless, and they have had a very volatile 18-month stride. However, even with that being said, this company is very stable and resilient. The stock price remains 50% below its former highs, so I really don't think this company is overvalued currently, because when we take that into consideration, the stock is actually still recovering, and SoFi's business is far better off right now than it was when they were at their all-time highs. So this is why investors should consider pouncing on SoFi stock right now and buying on weakness before Wall Street really catches on to the overall prowess of this company. For those of you who are not familiar with SoFi, they essentially operate as an all-digital bank through their digital smartphone app. They have no physical branches, and what I like about SoFi is that they are customer-centric. They focus on the customer and they educate their customers on how to build wealth, which is exactly what I do here on my channel. The company also tries to target young high earners because remember, the future of the economy are the young people of today, which eventually will become the millionaires of tomorrow. And this is going to improve this company over time. Currently, SoFi shares trade for $8.60, while very bullish positive analysts believe it could surge up to $15 per share. However, on the other side of the spectrum, this is what investors fear because low side sell sell-side analysts believe this company could fall to $3 over the next 12 months. And that's exactly why investors are liquidating their SoFi shares right now after that prominent analyst from KBW decreased his overall rating for SoFi Technologies SoFi stock. However, for me, I don't think so. I think that they are trading at a pretty decent share price to where even if this company did go lower in their overall share price, it just makes them a better buying opportunity. And here's why. Let's look at the numbers. SoFi has been a very popular bank, and they are an up-and-coming bank because they are not only just a bank, they are also a fintech company that is attracting customers hand over fist. Their member count soared from 1 million in early 2020 to nearly 7 million in quarter 3 of 2023. And this would mean that the Q3 count was 47% higher on a year-over-year basis, meaning that their momentum is extremely robust. And remember, SoFi Technologies is a fintech company which also has a banking license. And as a bank, SoFi's most important business is profitability in regards to lending money. And they are on the verge of profitability right now. If you didn't know, when you deposit money into a bank, that bank can use that money and lend it out to other people by charging them interest. And that's how the bank makes money. This also allows the company to pay interest to those who have deposited money into this bank. And this makes it very easy to entice and attract customers to their overall bank. Because let's say you have $10,000 and you want to put it in a bank, that bank is probably only going to give you maybe 0.65% on your money, which is not very impressive. However, if you did it to SoFi Technologies, you are going to make literally multiple times that amount of money in the overall interest. But SoFi doesn't just make money from charging people interest when they give their loans out. SoFi also generates money from their fees and services. For instance, total revenue and net interest income are shown on the screen right now, to where you can see their net interest income in purple, their net income in yellow, and in blue you see their revenue. And all of these normally are upticking except their net interest income. However, overall, this company will increase that as time goes on. SoFi has also originated $2.2 billion worth of student loans in 2022, which was a decrease from $6.6 billion in 2019. Now, the best part about this is that in 2023 and 2024, the overall loan volume for student loans, or rather student loan refinancing, are anticipated to slingshot back to at least $6.6 billion or more. So this is going to be a huge comeback in this overall business. On top of that, like we said, management believes this company will turn a GAAP profit during the current quarter or the next quarter. And GAAP profitability is no joke. That is profitability on a generally accepted accounting principles basis. And once they hit GAAP profitability, we are going to quickly see a multitude of analysts change their mind about SoFi Technologies and increase their overall share price. So ideally, you would want to get into this company before they become profitable. But you would want to do this by practicing proper risk management by not over-allocating yourself more than a 5% initial portfolio allocation. However, this is where it gets really good, because unlike the other analyst in the first article, this financial reporter, as well as myself, actually believe that SoFi stock is fairly priced at their current valuation. And here's why we think that. For instance, when we compare JP Morgan Chase and Bank of America regarding their price-to-book value or price-to-book ratio, here are the numbers. SoFi comes in at 1.8, JP Morgan comes in at 1.6, and Bank of America comes in at 1.03. So from a price-to-book value ratio, clearly Bank of America would take the cake here, and JP Morgan is a close second, followed by SoFi Technologies. But the fact that SoFi is even trading in the general range of these two banking behemoths just goes to show you how awesome SoFi Technologies actually is. For their ability just to compete in the same realm as these industry giants, that is very impressive. But it gets even better. Remember, the former analyst that we talked about believes that this company is overvalued and that they're trading at a premium, which is why he downgraded his overall rating from a market perform rating to an underperform rating. But the numbers just don't seem to back up his overall thesis. And that's why he never gave us hard numbers about what the company should be worth right now. Because according to these metrics, SoFi Technologies should be trading between around $7 to $9. So for those sell-side analysts that have a $3 price target on this company, I just don't really see the overall reason for that price target. And we also have to remember that SoFi is growing faster than Bank of America as well as JP Morgan, meaning that they actually should have higher accounting ratios by a substantial margin, because we get to discount these overall accounting ratios based upon their future growth. So remember, SoFi is actually trading neck and neck with these other larger financial institutions, but SoFi is also growing much faster than them, meaning that in the future, SoFi Technologies could have more competitive accounting ratios than most larger banks. And this should continue due to that new inflow of student loans that we talked about during the year of 2024, to where their student loan volume could exceed or meet $6.6 billion, which remember is just returning to regular levels. When we look at their overall percentage change over time, SoFi Technologies absolutely stomps JP Morgan and Bank of America, where Bank of America has around a 32% increase and JP Morgan has a 56% increase, while SoFi has a 726.3% increase. So for long-term investors who are looking for a high growth opportunity, SoFi Technologies could be the company for you. They are leading the next generation of American consumers in the banking industry because everything is going digital. That's why SoFi Technologies is a very appealing choice even at their current share price. But this company isn't going to stay under the radar for long, because like we said, as soon as this company officially achieves GAAP profitability on an upcoming earnings report, that's when a lot of analysts and investors are going to change their mind about this company, which is going to ignite the overall share price. So right now could actually be an opportunity to buy into this company and lower your average cost basis for this company. I wouldn't overexpose myself more than a 5% initial portfolio allocation to this particular company, because that's just proper risk management. There are so many amazing stocks on the stock market right now that there's no sense in overexposing yourself to just one singular stock. You should own a plethora of high-performing, innovative companies like SoFi, Palantir, and many others, especially if you are trying to focus on a more aggressive growth strategy. But even with that being said, feel free to also look into ETFs such as VTI, SCHD, and QQQM, because those could provide a stable backbone for your overall portfolio. And with that being said, I would love to hear your thoughts about SoFi Technologies. Do you think this company is overpriced, or do you think that they are fairly valued? Also, feel free to comment down below your personal price target for this company and how high you think it's going to go in 2024. With that being said, don't forget to go and annihilate that like button right now. Subscribe if you are new. Go ahead and become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with that being said, I will see you in the next YT video.